Children, tomorrow we will talk about IM and earning restatement.
What is impression management?
Impressions management is a process by which people control the impressions of the form of them.
I know. It's the presentation of self in everyday life.
Good effort, but it's not 100% accurate. One hint, playing the guitar.
The parents have arrived to pick up the children.
Don't forget to think of something about what we will talk about tomorrow.
Impressions management is a conscious or subconscious process in which people attempt to influence the perception of other people about a person, object, or event. They do so by regulating and controlling information in social interaction. Similarly, financial reports need impressions management to make good impression for their readers. But what about earnings restatement? It's the act of amending and re-releasing a previously released earnings statement with specified intent. Earnings restatements can be corrections in financial statements, but they can also help investors get a comparative sense of how a company is performing without a recently divested asset. With a change in accounting method or some other significant change in operations. Do you understand, children?
So, why do managers restate their earnings? Danny Dog, what do you think?
Danny Dog?
The eternal problem. It's a long story.
No, let me explain that, okay?
Plumlee and Young analyzed disclosures surrounding restatements filed from 2003 to 2006 and found following reasons. Under these conditions, restatements provide positive information.
Hey, Pony, what's the answer?
I think it is a characteristic of the accounting standards.
Please close your eyes.
For restatements attributed to some characteristic of the accounting standards, researchers also consider whether the company's disclosure suggests that the restatement is most consistent with following parts.
Thank you.
Amelia Elephant.
I think it's a problem of agency theory.
According to Jensen and Macklin, bind managers' remuneration with company share price could reduce agency cost. But due to this, some managers use inappropriate way to maximize their own benefits, and these could cause earning recast.
What's in your mind, Rebecca?
I find that the sensitivity of the CEO's option portfolio to stock price is related to misreport, and misstatements are more likely for firms that are constrained by an interest coverage debt covenant, that raise new debt or equity capital, or that have a CEO who serves as the board chair.
That was very good.
How about capital market pressure?
Candy, what's your answer?
Capital market pressure.
External expectation is also an important factor. Failing to meet the expectation might decrease share price and lower reputation.
I can still do another answer.
Susie Sheep.
External financing. No, you can't do that.
Oh dear, that was Pepper's last answer. In order to get external financing at a lower cost, corporations with no enough funds might restate figures on statements to change investors' and debitors' expectations so that they can sell shares at higher price or get loans at a lower interest rate.
It's so nice that everyone had a different answer.
Now, what do we have left? Peppa.
I was going to say the same answer, but they've all been down.
It's okay, you still have question 3 to present.
I know the company that has made an earnings restatement.
I wonder what the company is.
HealthSouth is a company which runs a chain of outpatient rehabilitation hospitals. The company made an earnings restatement for the years ended December 2001 and 2000, saying that it would bring the company up to date on all its regulatory filings.
First, from the picture above, we can see that HealthSouth reported a restated 2000 net loss of $364.2 million, or 94 cents a share, compared with a previously reported profit of $278.5 million, or 71 cents per share. The restated 2001 net loss was $191.2 million, or 49 cents per share, versus its previously reported profit of $202.4 million, or 51 cents per share.
You can see that they spent a lot of cash, which was $54 million, restructuring the financial reporting process, internal accounting controls, and management operations, and restate the consolidated financial statements. Managers expressed their attitudes towards actively handling accounting fraud incidents, corrected the company internal mistakes, and gave positive images to relevant stakeholders. Second, amended and restated credit agreement. The amended and restated credit facility cures all defaults under their 2002 credit agreement. Beginning 30th of June in 2005, it contains affirmative and negative covenants with the required ratios change over time. The amended and restated credit facility also contains restrictive covenants related to their use of proceeds from asset sales and ability to pay dividends. In addition, they expected that the funds generated from the expected operating resource plus the cash and cash equivalents available to them and the availability of credit under the revised and restatement will be sufficient to fund the operational and strategic plans for the next fiscal year. They also mentioned that although we face and continue to face serious financial, operational, and legal difficulties, our business is generating huge amounts of cash. The company is telling the readers that although the company is experiencing unprecedented difficulties due to accounting fraud, it is still the largest provider in some respects. Besides, they clarify the advantages of generating cash from operations and convinced readers that they would still be able to pay dividends and fund operations for the next fiscal year after overcoming difficulties through improving operations and capital structure. The managers emphasized the company's good prospects and weakening the dilemma caused by earnings restatement. Third, restated taxes. HealthSouth believed they had previously overpaid federal and state income taxes during the reconstruction period. In determining restated taxes receivable, they evaluated the potential exposures and computed probable exposures. They said in the report that we're continuing to cooperate with government investigations and have entered into key settlements with the government and various private parties. The company is telling the readers about the company's plans after the earnings restatement. They actively cooperate with the government's investigation and sought consultations with all parties. Like when restating taxes, they actively assess various risks, indicating that they have a good operating attitude after the accounting scandal. The managers emphasized efforts made after the accounting scandal and the prospect for the future, enhancing the confidence of the company's stakeholders, thereby weakening the impact of earnings restatement.